Property investing opportunities in the Dominican Republic for resort land and waste-to-energy projects, specifically those utilizing municipal trash and coconut husks to produce various fuels, are driven by the country's booming tourism sector, favorable investment incentives, and pressing need for sustainable waste management. As of March 1st, 2025, these opportunities combine real estate growth with innovative energy solutions, offering potentially high returns for savvy investors. Here's how they work and why they're compelling. Resort land investment opportunities. Tourism boom. The Dominican Republic is the Caribbean's top tourism destination, hosting 8.5 million visitors in 2023 per UNWTO, with projections nearing 10 million by 2025. Punta Cana, La Romana, and emerging spots like Pedernales fuel demand for resorts, driving land value up. Affordable entry beachfront or near beach land remains relatively affordable compared to other Caribbean hotspots. Prices range from $50,000 for ocean view lots to $150,000 to $500,000 for prime beachfront parcels, for example, Playa Nueva Romana. Per Seventh Heaven Properties data, though they're rising with infrastructure investments, government incentives, Law Number 158-01 on tourism. Incentives offers 15-year tax exemptions, income tax, import duties, VAT for new resort projects, extendable near the Haiti border under Law Number 28-01. Renovations of older properties, 5 years or more, also get full tax breaks, boosting ROI. Accessibility. 8 international airports, including Punta Cana, with 8 million passengers annually, make the Dominican Republic a logistical hub, enhancing resort appeal. Acquisition. Investors buy undeveloped or partially developed land in tourism zones like Cap Cana, Samana, or the new Cabo Rojo project in Pedernales. For example, a 1-acre beachfront plot in Playa Nueva Romana might cost $250,000. Development. Build a resort, condo hotel for example, Regatta Blue Bay residences, or rental villas. The St. Regis Cap Cana, starting at $980,000 per unit, shows luxury demand. Smaller condos can yield 8 to 12% annual rental returns, with a developer guaranteed 3.5% minimum. Profit. Rent to tourists via platforms like Airbnb or join a rental pool. A $500,000 investment in a 2-bedroom condo could net $40,000 to $60,000 per year. With capital appreciation as tourism grows, for example, 9.6% visitor increase in 2014, 12% projected for 2025. Key opportunities. Pedernales Cabo Rojo is a $2.245 billion public-private project known as Pro Pedernales, launched in 2023. It includes 9 hotels, an airport, and infrastructure over 10 years. Early land buys here could triple in value by 2030. Cap Cana offers elite beachfront plots near a top marina and golf course, catering to high-end buyers, with resale potential as St. Regis expands. Samana is less saturated, with pristine beaches and whale watching, making it ideal for eco-resorts at lower entry costs, around $100,000 to $200,000 per acre. Risks. Rising costs. Prices are climbing, up 10 to 15% since 2020 in Punta Cana. Delay could mean missing the affordability window. Permits, municipal delays and variable fees with no fixed formula can stall construction, according to Trade Commissioner reports. Waste-to-energy projects using municipal trash and coconut husks. Why waste-to-energy? The Dominican Republic generates 11,000 metric tons of municipal solid waste daily, 4,000 tons in Santo Domingo alone, with over 350 open landfills. Coconut husks add more than 20 tons per day in hubs like Nagua, piling up as methane-emitting waste. With 21,170 gigawatt-hours consumed in 2023 and a projected 30,000 gigawatt-hours by 2030, the Dominican Republic's grid, which is 40% natural gas and 31% coal, needs cleaner options. Waste-to-energy cuts fossil fuel reliance and landfill strain. Law Number 57-07 on renewable energy prioritizes municipal solid waste and biomass projects with tax exemptions on income tax, import duties and VAT, and mandates renewable energy purchases. Municipal solid waste and husks can produce diesel, syngas, biochar or pellets. High-value fuels for transport, power or export, like sustainable aviation fuel for aviation. Feedstock collection. Municipal solid waste can be collected by partnering with municipalities or private haulers, with examples like the 250 tons per day in Northwest Line projects. Santo Domingo's 4,000 tons per day offers significant scale. Coconut husks can be sourced from processors in Samana or Negua, where husks are 85% of coconut weight and often dumped. Processing involves pyrolysis or gasification, where municipal solid waste and husks are heated between 400 and 800 degrees Celsius in low oxygen chambers. Municipal solid waste yields syngas for power or bio-oil for diesel and sustainable aviation fuel, while husks produce biochar with a yield of 43 to 75% or syngas. Pelletizing involves grinding husks, binding them with starch and compressing them into dense pellets, which are valued at $600 per ton compared to $150 per ton for raw husks. A 250-ton per day municipal solid waste plant could produce 50,000 gallons of synthetic diesel, which is R100 renewable, and 20 tons of husks could yield 8 to 15 tons of biochar valued at $2 to $250 per kilogram, or pellets. Fuel types. Synthetic diesel, derived from municipal solid waste bio-oil, is sold at $3 to $4 per gallon locally or exported, following models like Ridge Partners. SAF precursor involves biochar or bio-oil from husks, and municipal solid waste feeds gasification for jet fuel, cutting emissions by 80% according to ICAO, and is exportable via free trade zones. Biochar serves as a soil amendment at $2 per kilogram or as SAF feedstock, offering carbon sequestration of 400 kilograms per ton. Pellets are a clean-burning fuel for rural homes and industry, priced at $600 per ton. Sales and export. Locally, diesel and pellets power local grids or transport, while biochar boosts the Dominican Republic's sandy soils. For export, free trade zones such as HANA enable tax-free export of sustainable aviation fuel and diesel to the United States or Europe, leveraging the Central America-Dominican Republic Free Trade Agreement. Key opportunities. The Northwest Line Ridge Partners' 3 projects near Santiago Manzanillo aim to process 85% of regional MSW into diesel, with tax incentives under Law 5707. A $5 to $10 million plant could net $5 million per year at scale. In Santo Domingo, 4,000 tons per day of MSW could fuel a 500 megawatt waste-to-energy plant, cutting landfill use and powering 10% of the grid, which is about 2,117 gigawatt hours. Coconut Zone's Nagua and Samana husk projects could yield $1 to $2 million per year in biochar and pellets from 20 tons per day, with FTZ refining for SAF export. Profit mechanics. An MSW plant processing 250 tons